Top of the morning, back at it again with another one. And today we're looking at the Nasdaq. Just a quick heads up, apologies for the trash audio quality. I'm currently on the road and I don't have my usual setup on me, but I'll get it sorted pretty soon. Either way, you should find this valuable. So I'm gonna go over to yesterday's trade. Very lovely approach as well. It's something that I'll be using moving forward, and hopefully the logic is simple enough for you to get an idea of what it is that I do look for on a day-to-day basis, and as well as how I use it. So we start off on the weekly time frame to get our bias. This is where we determine roughly which direction the weekly candle is most likely to expand off to. As you can see, we've been inside this range. We're looking at that low to that high. We've been operating inside of it, picking up some internal range liquidity, which is different PDRAs. You can see here we filled this imbalance with this down close, pushed up, came down again to tap into this high over there. That high also, these order blocks pick up that liquidity there to keep us pushing through, and we use that same idea as well. As we're still in the range, we're targeting that high over there. We used a volume imbalance. So as you can see here, I'm just gonna zoom in so that it's easy to see. You see the separation between last week's candle, last week's weekly candle and the previous week's weekly candle, that gap over there. Price dipped down into that on Monday to fill that up, gain more liquidity, and then use that to expand to the upside. So that gives us our bias. Weekly volume imbalance to a weekly high or buy side liquidity. The first or closest form is obviously here. The next is there. Of course, before today it was there, but we cleared that out easily. More on that later. But let's go down to a daily time frame. Now that we have our bias, which is bullish, we're looking for more evidence to justify a bullish trade. We already have an idea of the buy side or the liquidity resting above us, and so that's where we're looking to go. You can see here that we had Monday's low and Monday's high. What price did prior to just about New York Open is that we purged yesterday's low. Purging yesterday's low, we're now looking to expand to the upside to take out yesterday's high and ultimately this liquidity pool over there. So that's what then gave us our further confirmation of our bias. We had our target and we just had to go to the lower time frame to now look for entry signals. We now go to our 4-hour time frame to gain our context. The context for us is internal range liquidity to external range liquidity. So we're looking at the new week opening gap, new week opening gap high, new week opening gap low over there. Monday's low is there as well. You can see we purged it, and then we're looking to take out the high. So we're looking at this range low to that range high. We're looking to take price like that to the upside in line with our bias. That's what we're looking to do. You can see that volume imbalance high also lines up there. You can see how price is reacting to that. Not random at all. Now let's look at the PD array we're looking at. Bit messy, I know, but like I said, the logic should be simple and easy to follow, and you'll see. We have obviously our new week opening gap high, new week opening gap low. That PD array, very powerful draw that we're looking to take advantage of, as well as the fact that we had high impact news yesterday. This was the 29th of October 2024. So prior to that, the news came out at about 8. It was quite lackluster to be honest. 9 o'clock we saw a bit of volatility. We pierced down, took out that buy side liquidity there, worked up again, went up and then inverted and hit that hourly fair value gap over there. We closed through it. So once a bullish fair value gap gets close through, we're looking at it to now become bearish. We're looking at price to tap it and go down, but we got signatures that showed us that indeed no, price is more than likely to continue to the upside, which is precisely what happened. So if we could bring it down to a micro level, and let's say we're looking at the hourly time frame, could have been looking at the context of that low to that high there, taking that internal range to the external range. I hope you get into to see the picture. Same with here, or more so back to the trade that we took. We were looking at the low to the high. We wanted to take the internal range liquidity, which is this fair value gap here. That's the PDRA we used. Rode it all the way up to the highs as was over there, and then that was our trade terminus. Let's go down to the M15. M15, you can. I'll just remove that for now. Move that there. Just ignore that gray box for now. I'll explain what that's for. What that's for. So you see nine. We came, got the closure above the fair value gap, came back down with that low, tapped into it, and then it was all on its way up. And the rest is history. Rest is history. When did it come back to tap it again? At 10 o'clock, silver bullet time, right? Also, which falls in line with what's this thing? Quarterly theory. I don't have that boxes drawn on, but if you know quarterly theory, you know what I'm talking about. If you know, you know, baby. I'll link the video to the quarterly theory. But this impulse here at half nine, I used that to put a projection fib, measuring the low to the open of that 9 o'clock candle, that manipulation that took out the liquidity. Using that, I was able to use a projection fib targeting the -2 standard deviation. This was a nice level that lined up with my take profit. So I had further confirmation that this is an A plus setup that we took. Easy peasy. Usually it pushes 4 standard deviations. It might do something like check out this double these lows here, reverse to push to the upside, and then ultimately check out that level we're looking at and reaching the -4. It might do that, who knows? Hint hint nudge nudge signal. But that's yesterday's trade. The entry was on the 5 minute. You can see here that 9 o'clock candle, it dipped down, opened up a fair value gap. We pushed into the fair value gap, didn't close out of it, worked outside again, didn't close out of it. But then when we got the closure there, that confirmed the closure out of that fair value gap, that confirmed that we're now bullish. You can also see the power of three. You can see the accumulation there, the manipulation, and now the distribution to the upside. Very beautiful. I entered just above there, just after we crossed that this bearish fair value gap. Apologies, this bullish fair value gap, sorry, this down close candle. We came down, tapped into it, and then as we we're going up, I then entered around there, targeted those highs there, moved my stop loss from beneath over here to underneath this order block here after this one formed, and the price was beginning to push its way up. Notice how price respects the halfway point here, that's that red line of this black candle, and the top of this order block here. We're tapping into that, having a stop loss behind 1 2 down close candles, or order blocks in this case, has proven to be quite safe for me, and it's something I'll look to carry on moving forward. So after price had clearly broken away from the fair value gap or the PDRA that I was targeting, it began to start pushing and pushing and pushing, and then that's when I was able to move my stop loss from beneath the leg that manipulated and took out the liquidity to just above my entry point, making this a risk-free trade. And then we pushed up. Roundabout in this region, this is where it was 1 standard deviation up, or halfway point of the trade. I took some here since I felt uncomfortable. You know how it goes, human emotions, but I'll speak more on the emotions and such as we go along in the series on the channel. Took off half of the position, left the other half risk free, and we hit TP just before the afternoon session, which was a very lovely day. So just to run it back quickly, we need three things, or four things rather: our bias, context, PDRA, and an entry, right? For our bias, like I said, on the weekly time frame, price tapped into a volume imbalance and began to push up. And also on the daily, we opened and then ran below the lows of Monday. We're looking at taking out the highs of Monday now. That gave us our bias. For our context, we went to the 4 hourly time frame. We're looking at this range here, that range high to that range low. This is our context. We're looking at taking the internal range liquidity in the form of the new week opening gap as a draw or entry point, and then exit as price ran above this buy side liquidity here, or these highs on the 4 hour time frame. The PD array we used was an hourly fair value gap, as you can see here. Hourly fair value gap, that's what we used. As price closed above it, it came back down, tapped it, and then that's where we were able to enter and proceeded to go to the upside. Entry was via the 5 minute chart. At market open, we had a manipulation leg push down, open up a fair value gap, and then price pushed up again. Once price closed above that fair value gap and above this down close candle here, we had a change in the state of delivery. Price tapped back in the hourly or fair value gap or this 5 minute order block, and then began to spool to the upside. Initially, our stop loss was placed below the manipulation leg of the candle at 9:30 that took out the liquidity. Once price began to push up in our direction, and we had two PD arrays in front of our entry point, we moved our stop loss to just above entry, underneath these two down close candles or PD arrays, order blocks, as protection, and then price began to spool away in our direction. Points that we were able to collect using the top of that order block, that M5 down close candle that opened the market at 9:30 to the desired high point. That's 165 points. And then if we put our stop loss in its original position, that's about 80 points. So it's a 2.07 risk reward ratio. Not too bad. Quite beautiful actually. Glad I could share. Um, yeah, obviously the language is a bit much for those who aren't within the ICT space, but I'll work on making it more and more simpler. And also, the more time we spend together, the more easily to understand all of this will be. Please also thank you for the patience and being with me as I deal with the situation with my microphone and equipment. Like I said, I'm a good far distance out from home, but I'll make something happen. Thank you for the time and attention. Thank God for the skill, and let's keep working at it.